In 1997, the world's largest undiscovered gold deposit was worth $6 billion, except it didn't exist. The story we're taught is straightforward. A small Canadian mining company, Bre-X Minerals, discovered massive gold reserves in Indonesia. Geologists confirmed it, investment banks backed it, governments wanted it. Then one day, auditors showed up, tested the samples, and found nothing. Fraud, collapse, end of story. Except that narrative leaves out the decisions, the specific, rational choices made by intelligent people under pressure that created a $6 billion phantom. Started in 1993. Bre-X was a junior mining company with almost no assets. Its founder, David Walsh, was a geologist and financier with a reputation for taking risks, the kind of man who sees a problem and makes a bet instead of walking away. He acquired exploration rights to a property in Buseng, a remote region of East Kalimantan, Indonesia. The land was cheap. The permits were available. Nobody else wanted it. Then in 1995, Bre-X's chief geologist, Michael de Guzman, began reporting results. The core samples were extraordinary, not just good, world-class. The kind of deposit that appears once in a generation. The assay numbers climbed: 50 million ounces, then 70, then 200 million. Each report was signed off by a qualified professional. Each one moved the stock price higher. Here's where the first decision point matters. By 1996, Bre-X's stock was worth $286 million. The company needed capital to develop the mine. They needed a major partner, a real mining company with the money and expertise to extract gold at scale. They needed Freeport McMoran, one of the world's largest copper and gold producers. Freeport had the infrastructure in Indonesia. Freeport had the cash. Freeport had the reputation. But Freeport demanded independent verification. They hired Strathcona Mineral Services, one of the world's most respected mining consultants, to audit the Buseng property. This is the moment. Strathcona arrived in 1997 with their own drilling equipment and their own assayers. They took their own samples, they sent them to independent labs, and they got results that matched Bre-X's numbers almost exactly. The phantom was confirmed by professionals with zero incentive to lie. This is where the accepted story crumbles. Everyone assumes Bre-X's samples were fake from the start. That's the comfortable version. The reality is messier. The core samples were real. The problem was what happened to them between the drill site and the assay lab. Someone, almost certainly de Guzman, was salting the samples with gold, high-grade ore from elsewhere, crushed and mixed into the core samples before testing. It would fool any lab. It fooled Strathcona. It fooled Freeport. Freeport, now a partner, completed their own drilling in March 1997. They used different techniques, they used different assayers, and they found almost nothing. The gold wasn't there. Freeport knew immediately. They didn't announce it publicly. They called Bre-X. The conversation was simple: we're not proceeding. Your deposit doesn't exist. On March 19, 1997, before the market opened, Freeport issued a brief statement. The deposit appeared to be substantially smaller than earlier estimates. That's all they said. The stock dropped 40% in the first hour. Within weeks, it was worthless. The company's market value evaporated from $6 billion to nearly zero. Investors who had believed the story, pension funds, individual investors, banks holding the stock as collateral, lost everything. Michael de Guzman, the geologist who made the discovery, jumped from a helicopter over the Indonesian jungle on March 19. The same day the news broke, his body was never found. Whether it was suicide, accident, or something else, nobody knows. But the timing was precise. He'd been confronted about the samples. He knew what was coming. Here's the real story. This wasn't a simple con. David Walsh wasn't running a deliberate scheme from day one. He made a decision in 1993 to explore a cheap property. He made another decision to hire Michael de Guzman. De Guzman made the decision to salt samples when early drilling wasn't producing the numbers he wanted or that Walsh expected. Each person made a rational choice given what they knew and what they needed. Those choices compounded. The investors believed because the story was plausible. Indonesia had gold, Bre-X had a license, the samples checked out. Freeport, a Fortune 500 company, was interested. When institutions with skin in the game validate your claim, skepticism feels expensive. Asking hard questions costs you deals. Staying quiet costs you nothing until it costs you everything. The legal aftermath was anticlimactic. Walsh faced charges but died of a liver ailment before trial. No one was ever convicted of fraud. Some junior executives settled civil claims. The Indonesian government asked for their share of a deposit that didn't exist. The story just ended, not with justice, with exhaustion. What Bre-X cost the world? $6 billion in destroyed wealth. Thousands of investors lost their retirement. A company that briefly looked like the future of mining vanished. Indonesia lost credibility for years afterward. Mining exploration in the region slowed, and the lesson we took away was wrong. We blamed fraud. We should have blamed the structure that made fraud profitable, the one that rewards early believers and punishes late skeptics. The real cost wasn't paid by de Guzman or Walsh. It was paid by the people who made the rational choice to trust institutions and professionals. The cost of Bre-X wasn't fraud. It was the gap between what we can verify and what we're asked to believe. That gap hasn't closed, it's just moved. Subscribe to this channel. Every week, we break down the decisions that destroyed empires, not the accidents, not the bad luck, but the specific choices made by people who thought they were being smart. because understanding how Bre-X happened is the only way to see it coming next time. Subscribe, there's a new financial collapse waiting every week.